How's it going, everyone? It's Sam. I want to talk to you today about how to build a crypto portfolio. Now, I'm not sure I've gone into this before. I've talked to you about what I'm buying. I've talked to you about news in the crypto market, but I have a feeling that crypto is going to do quite well over the next year, couple years, probably decades. And that being said, I want to talk about how you can actually build out a portfolio, what you should be looking at, where you should put it, what to buy, all that kind of stuff. Now, I'm not a financial advisor, so do your own research. I'm just going to tell you, if I was starting a portfolio today, what I'd be doing. Now, I actually changed how I'm investing into crypto recently, and this is going to be pretty much how I do it now. So this is going to be this is going to have to depend on your own preferences though, and your own risk level. We'll talk about that. But that being said, let's get into it. So if you guys don't mind hitting the like button, I appreciate that. Now, why would you want to invest in crypto in the first place? We'll just cover that really quickly. Well, a lot of the crypto market went insane this year. It went up to massive numbers that we haven't seen before. We can see the all-time high in Bitcoin, nearly 65,000. Ethereum was 4,400. BNB was 690, XRP $3.84. We have Dogecoin going up to 74 cents. We had insane highs for a lot of cryptos, and it got people interested in the space. Now, having great high prices is fantastic, but you need some utility behind it. And I think that's where a lot of people are starting to get interested in crypto, because it has come down a significant amount. From the all-time highs, we're down about 50% on Bitcoin. We're down over 50% in Ethereum, down over 50% in BNB, over 50% in Cardano. So people are buying at a lower price, and we've had a lot of time to research cryptos and get comfortable over the last couple months. So why is it down right now? Before we get into where to buy, how much to buy, and stuff like that, well, I personally think that there's some manipulation in the market, and I'll show you why here in a second. But I think with that manipulation, there are a lot of people that are fearful, and they sold, obviously. Now, why do I think there's manipulation? Well, we get a lot of conflicting news from banks that are trying to get into crypto and crypto investing for themselves or for their clients. We have a lot of larger investors too that are manipulating the market. And the thing is, it's still very easy to manipulate because it's a small market cap. The whole market cap of crypto is just about 1.3 trillion. Now, that would be the equivalent of like just a little bit bigger than Facebook. This is smaller than some companies in the world. And there's a lot of money to be made, especially if you're looking long term. Countries are literally adopting it as legal tender and using that in addition to the US dollar. So there's a lot of excitement there. Now, one specific example of this is that Goldman Sachs, just as of June 14, came out, and their wealth management division said that cryptocurrencies are not a viable investment for diversified portfolios. Now today, yesterday, we actually had a report that said the ultra-rich are turning to crypto after driving the SPAC boom. A Goldman Sachs survey found that nearly half of family offices the bank does business with want to hold digital currencies to their stable of investments. So they just said that's not viable, and now they're saying that a lot of the offices, the family offices, that have tens of millions, hundreds of millions, a couple $1 billion worth of investments, are turning to cryptocurrencies. They're wanting to buy cryptos early after they were in the SPAC boom. So if you remember the SPAC boom, there were companies that were going up 30, 40, 50%. It was easy money. And now people are thinking that cryptos are going to be easy money long term. So we have Goldman a month ago saying, hey, it's not a viable investment. And now some of the companies that they work with, some of the family offices that they work with, just happen to be investing heavily in crypto. So you can see there's almost like a little switch that's being turned more bullish now, where the banks might start reporting some bullish news because enough of them were able to get in on the crypto dip. So we have seen a massive dip. Now, looking at what to buy, where to buy, how much to buy, all that. Okay, so first of all, you need to know where to buy in the first place. There are a couple different ways you can do this. You can buy on different exchanges, and you can take it off exchange. You can keep it on a hardware wallet. Now, what I like to do is I actually like to hold it on different exchanges. There are two that I specifically use that give me interest. And there are links underneath the video. If you want to use the link, you get bonuses for signing up. Voyager is one of them. You can win, or you can earn up to 12% interest APR on some of this. So it's actually 12% APY. You can earn 12% on some of your cryptos. It's an awesome return. Now, they are a newer company. They're a little bit more aggressive with their interest rates, meaning that they give pretty high interest rates, which is awesome. In this scenario, I'm going to be talking about if I held my crypto on Voyager or this other company, because it does pay an interest rate. And over time, if you get, let's say, a 5% interest rate in your portfolio, grows from 5,000 to 100,000, that interest rate is going to be really important, because again, the crypto is going to be worth much more in the future. So if Bitcoin goes 10x, that 5% rate is going to be very significant years down the line. So that extra 0.02 Bitcoin that you own is going to be worth a lot more in the future. So while you might be getting $100 worth of interest now, it's going to be equivalent to a lot more in the future. The other company I like to use is BlockFi. Now, BlockFi is a little bit different. Their interest rates are a little bit lower, but they are a little bit more built out as a platform. You can actually get loans from your accounts, and you can actually get a credit card too that pays you back in Bitcoin. So I like those two. I think it's important to have two different accounts, because sometimes when there's volatility, these platforms still go down. So there might be an issue with one. It happened a little while ago, a couple months ago, where there was a lot of volatility in the market, and literally every single platform that I could find went down. So that's something to consider. Now, how much do you actually buy? Well, that's going to be based a little bit on your own preferences. Now, I will say, if you need the money in the next year, 2 years, 3 years, if it's not for retirement, I say that you should be careful. If you are going to use the money for anything anytime soon, I don't think you should invest it in cryptocurrencies. This is a very volatile space. I mean, we saw that a lot of cryptos have fallen 60, 70% over the last couple months. So if you have $10,000 and you need to put it towards a house or a car, it might fall down. And that can cause you to make some bad decisions long term. So just know that off the bat, this should be money that you do not need. Now, that being said, how much should you invest? Like, do you put all your investments in cryptocurrencies? It's going to depend on your risk tolerance. It's going to depend on your timeline. Personally, I am investing about between 25% and 30% in cryptocurrencies. Now, for me, that makes me comfortable. I can buy a different amount of each cryptocurrency and base it on my own risk tolerance. But that is what I'm comfortable with. I have other money going into stocks. I have other money that's going to go into real estate. And then I have some money that's going to go into stablecoin too. So stablecoin is kind of a cryptocurrency, but it doesn't fluctuate in price, which is really nice. So that being said, you can split it up however you want, but make sure that it's something that you are comfortable with risk-wise. Of course, you could see your portfolio fall down 30% a day. So you have to be careful that you don't put too much in, that you start making rash decisions. So like I said, maybe 25%, at least for me, 25% of my investable assets are going into cryptocurrency. Now, we know the platforms that we're going to buy it on, interest rate bearing platforms. We know how much now, and then we have to know what to buy. So this portfolio is what I'm comfortable with. I think you could obviously get better returns if you pick the unicorn crypto and you put all your money in it and it goes up 100x, but that's probably not a good long-term solution, because think about it this way. Let's say you get a 10x crypto, you get a 10x crypto, you get a 10x crypto, then you get a 0x crypto. It goes down to 0. You're left with $0. It doesn't matter if you had $10 million. If you put 100% of it in, eventually, if you do that enough times, it will fall down probably to near 0. Now, you can always have stop losses set up and stuff like that. You can try to play that game, but I think diversification is key, even in crypto. Now, some people just believe in buying Bitcoin, and I understand that, right? Bitcoin is the largest cryptocurrency. It's the one that's being adopted by countries. It's the one that is literally its own investment class now. A bank recently declared it its own investment class or asset class, and that doesn't happen very often. I looked, in the last time that happened, where there's a new asset class, was hundreds of years ago. So you can buy just Bitcoin, but I think if you invest in Bitcoin and some other cryptocurrencies, it will probably yield a better result long term, but it's also a little bit riskier. Bitcoin typically doesn't fluctuate in price as much as a lot of these other cryptocurrencies, where Bitcoin might go up 50%. Something like Ethereum or BNB or Cardano would probably go up 70, 80, 100%. So with that being said, this is going to be a couple different cryptos. So first of all, I like Bitcoin to weight down the portfolio. Just like a investment portfolio full of stocks, right? If you want to hold an index fund, it doesn't fluctuate in price as much. This is the crypto that people know. This is the crypto that people buy when they start investing in cryptos. A lot of people think that it will surpass gold in market cap years down the line. They think it's gold 2.0. If it surpassed gold in market cap, it would go about 17 to 18x from here. So if you bought 0.1 Bitcoin now, that would be about $3,200 worth. That means that you would have about $58,000 if it went up 18x. Now, from there, I suggest personally 40% into Bitcoin. 40% really weighs down the portfolio. It will help you stack sats or stack Bitcoin over time and will give you the most exposure to the least risky of the cryptocurrencies, in my opinion. From there, I really think that 20% of the remaining 60% should go into Ethereum. Now, some people are even more bullish on Ethereum than this. Ethereum is interesting because Bitcoin is like digital gold and Ethereum is like the internet. So many different projects are built on Ethereum and you need to pay gas fees, you need to pay transaction fees, you need to pay in Ethereum. So a lot of people that don't even necessarily want Ethereum have to use Ethereum. Ethereum does have a couple big things coming. They're moving from proof of work over to proof of stake. They're also going through EIP 1559, which should actually hopefully make Ethereum deflationary. So from there, I think 20% goes into Ethereum. Ethereum probably has a higher potential than Bitcoin long term, but is also a little bit riskier because there are some different risks to it than Bitcoin. Some people think that it will be overtaken by some different cryptocurrencies. And that kind of brings us into the next two cryptocurrencies that we're going to invest in. Now, you can invest 5%. I personally invest 10% into both of these. So 10% into BNB and 10% into Cardano of the remaining 40%. We'll have about 20% left after this. 10% goes into BNB. This is a token or a crypto that I think will do quite well. They're still down significantly from their highs. If you don't know what BNB is, it's the native token of Binance chain. So BNB is part of Binance, or Binance puts out BNB, and Binance itself is the largest cryptocurrency exchange. It does significantly more, like 7 or 8x more volume on a daily basis than any other cryptocurrency exchange in the world. You need to pay BNB for different transaction fees, and they burn it every single quarter. So right now, they have 168 million BNB in circulation. They're going to continue to take profits from their exchange and buy back BNB and burn it until there's just 100 million BNB left. So that is one catalyst that's going to be here for a long time. Binance as a company continues to grow and continues to innovate. I think it's going to do quite well over time, but it is a little bit riskier than Ethereum and Bitcoin, so that's why I have about 10% of the portfolio. Then Cardano is a peer-reviewed crypto. So while other cryptos kind of hang by the seat of their pants, or they fly through innovation, Cardano does everything peer-reviewed. They're very systematic, and that's good and bad. That means that oftentimes when they change, they do it quite systematically, but it's also slower than some other cryptocurrencies. They do have a kind of like a cult following. There are a lot of people that love Cardano and are very bullish on it, and it has more Cardano staked, or Cardano has more stake than any other cryptocurrency out there, meaning they have a lot of long-term investors. Now, on Cardano, you can get like 6% on Voyager, which is really interesting. I mean, it does have a lot of upside to long-term. A lot of people think that it will be used more than Ethereum long-term. Now, even more people than that, I think, are more bullish on Ethereum, but there is a significant amount of people that are bullish on Cardano long-term. So 40% Bitcoin, 20% Ethereum, 10% BNB, 10% Cardano, maybe 5% for BNB and Cardano, depending on how bullish or bearish you are. And then from there, we have about 20% left, right? So we're gonna break down the small cryptos here. I personally think that it makes sense to invest some into some smaller projects. Now, personally, I don't have any invested in Dogecoin. I know some people are bullish on that, or XRP. I do have 2.5% going to Polkadot. I think this crypto will do well long term. I also have 2.5% going to VeChain. So I think VeChain will do quite well long term too. They are a smaller crypto. It's only about 4.3 billion, but they have a lot of big partnerships with a lot of big companies. If you look into VeChain, they probably have one of the best use cases out of the cryptos out there, and they have a ton of big partnerships. They're very close to China too, which some people think is bad, but honestly, with China banning some of the other cryptocurrencies, it does give them a leg up on one of the biggest economies in the world. I also have 2.5% going to Matic, and then 2.5% going to VGX, which is actually a Voyager token. The reason I like this is they have a couple big things coming. They have a loyalty program that's going to be announced, or actually going to go into effect here soon. And by holding on to about 500 VGX tokens, which is about $800 now, $900, you can actually get an extra bonus, an extra interest rate on your crypto. So it gives you 0.5% more towards Bitcoin and Ethereum, which is going to be really important long term. So then we have about 10% left over, and I believe in keeping that in stablecoin. So that allows you to buy the dip. Now, I think you should dollar cost average. So as you go along, you throw a little bit of your paycheck into these different cryptos. But then I also think you should keep a little bit of money just in case there's a dip. Now, you might want more than 10%. Like if we go back to that scenario where we only have 5% in BNB and 5% in Cardano, then putting 10 extra percent into stablecoin, I think makes sense. For example, too, on Voyager, they give you 9% on stablecoin, and then on BlockFi, they pay you 7%, but you can get an extra bonus using their credit card. So you can get between 7 and 9% on different stablecoins in interest every single month, and then you can buy the dip on some other cryptocurrencies if you see a good opportunity, or you can just keep on stablecoin, and then that will weigh down your portfolio even more because you're just gaining interest and it doesn't change price at all. Now, I think you should do your own research on these, figure out which ones you're most bullish on, but I do think weighting down your portfolio makes a lot of sense because then you won't make rational or irrational decisions and go and sell your portfolio when it's down 50% because you can't handle the volatility, and then the banks go around and determine that now is the time to pump up the whole cryptocurrency market. Now, let me know your thoughts down below. What do you think you should buy? What do you think your portfolio should look like? Where do you keep it? All that good stuff. Now, if you do want those links down below to Voyager or to BlockFi, you can check them out underneath the video. It does pay pretty well, and there are bonuses. So there's interest rate and bonuses just for signing up. If you guys want, there is the wait list to the credit card on BlockFi underneath the video. If you want to try getting on that, I have the credit card myself, and I've been using it exclusively for the last month or so since I got it. Thank you guys, and let me know what you think about this down below. Bye.